Hey traders, how's it going? Brandon Carter, FX here, aka Mr. Golden Ratio. Currently entering the chapter of psychology, which is obviously one of the hardest parts to conquer because a lot of people just overcomplicate things, scare themselves out of the market, only to see the market eventually go their way. Um, and this is, of course, when you know, a decent strategy is implemented. But, however, this when this strategy is implemented, your psychology will be the only thing that holds you back from success. So let's talk about psychology, right? So I have this here, this chart laid out, and people would say, this is the perfect example of what I mean in regards to the psychology of trading when implementing, uh, you know, a, a strategy, a good strategy, right? And you really being stopped out by yourself. Not even necessarily stopped out on the trade. I mean, yes, stopped out on the trade, but really it's your own psychology that's stopping you out of your trades. And here's an example. Obviously, a lot of people out there know of the very basics of trend lines and trend line breaks and retests, etc., etc. But they do not know how to properly implement these strategies in a way that will put the odds highly in their favor in regards to making profits, trading consistently. So here's an example. We know the lower highs, lower lows, lower highs, lower lows, right? Got the break, got the retest, and continuing up to make higher highs. This high being higher, this high, then this high being higher than this high, this low being higher than this low, and this high being higher than this high, and this low being higher than this low. Well, obviously, one would think, and the masses, as we know, 95% or more statistically fail at trading and never make a single bit of profit. You know, um, never are able to live off of any significant amount of profits in the trading. Somewhere up around 95, 97% of people, because they're all sheep minded, they're all uneducated, lazy, one of or a combination of all of what I just mentioned. Um, and so let me give you a perfect example. All right. So nope. We know the lower highs, lower lows. Oh, trend line break, retest. Oh, this is a perfect opportunity to go long. One would think, right? It's a perfect opportunity to go long. I'm gonna go long. I'm gonna go long. Says the amateur trader, the one that consistently loses money. I'm gonna go long now. Enter, place my stop down here somewhere, or here, or somewhere below this ascending trend line, right? All right. One would think that. Well, let's see how that plays into the psychology aspect um, of trading, which is the masses are thinking, oh, the market direction has changed. Now we're making higher highs and higher lows, right? And that's a reason to go long. So's taught everyone in the world that loses, majority, right? Okay, well, let's back it out a little bit. Let's see what's really going on. Notice we're on a 30-minute chart. 15, you know, 15 minute, 30 minute, the lower time frames people typically like to stay on. They, for whatever reason, they think that, oh, the lower the time frame, I can have, smaller stops, tighter stops, and, get my profits quicker because, the time frame is smaller. I can get my profits quicker. Wrong, dead wrong. Try again. Okay. So again, let's back this out and see what's really going on. Hmm. 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 Right at the moment when you're thinking, oh, this is the perfect time to get long, look at what you're getting long into. Major previous support to potentially act as resistance and just absolutely tank on you. And what's the first thing you're going to say? Oh my gosh, it's my broker. He's hunting my stops. He's manipulating the market. He's widening the spread, etc., etc. All the excuses in the world. When in reality, it was you. You're the one who decided to get on this smaller time frame, stay on the smaller time frame, look at this, what would appear to be as market, change in direction, not paying attention to the big picture, doing what most would-be wannabe traders do, and just thinking you got it all figured out, when in reality, let's even go up to the daily, look in that same area that you looked to get long in, which is right here. Let's move these trend lines, kind of blocking price action here. That same area that you looked to get in long was right here on the lower time frames. Look at what you're getting long into. Major daily previous support broken through to act as resistance to just tank, easily 200 plus pips on you. But, leave it to the would-be wannabe trader. The market started making higher highs and higher lows, and that's the perfect, and the trend line breaking retests. That's the perfect reason to get long, according to those lower time frames, one would think. But when you look at the big picture and what's really happening, you see why that would be a horrible decision, greatly against the odds being greatly against you of it going your way. That's a big part of what I mean when I say the idea of psychology and thinking against the market. So while everyone's while they're stuck on these lower time frames, right? The successful trader thinks against the majority. So we got to think against. So while they're looking at higher highs and higher lows, the successful trader like us, BCFX signals.com traders, BCFX online course students, the successful traders, we love the idea of higher highs and higher lows because we're looking to short. We're waiting for that short to come. And you already know what we're looking for, what we're going to do. Because we started from the higher time frame analysis. What we're going to do at this point, knowing that it's coming up into our zone, we're going to do just like this. So while they're looking at higher highs and higher lows and getting excited about longs coming, we're looking at higher highs and higher lows, getting excited about the big short that's about to happen because we know what's happening on the bigger picture. So it's just greater. It's just giving us a greater price to get in at. Yeah, you just keep the traders like us, we're thinking to ourselves, yeah, you just keep making those higher highs and higher lows because I'm about to short the short out of this thing. You know what I mean? And essentially we're thinking against the masses. We're thinking against them because these same higher highs and higher lows that we're looking at as a reason to short, they're looking at as a reason to get long. And there's multiple examples of that. And this is USD CHF, right? But once you see this happen over and over, you'll begin to gain the confidence to know that even if you get stopped out a couple times, a few times, 1, 2, maybe even 3 trades back to back, the odds are in your favor that most likely by that 4th trade or that 5th trade, you'll end up with that big 200 pip, 150 pip runner, 300 pip runner, trailing your stops along the way, knowing that the odds are highly in your favor. And that plays a part in psychology. Let's bring it to another pair. Let's do CAD JPY, right? And once again, one would think, one would look from the left of the screen to the right of the screen and think, well, looks to me like we're in long territory. Looks to me like we're in long territory because we're doing what? Higher highs and higher lows, as everyone loves to say. Higher highs and higher lows. Time to go long. Right? Wrong. Wrong. And I'm going to show you why. Let's go back to the higher time frame. Successful traders, we like to think against the market. They're thinking longs, we're thinking shorts. They're thinking shorts, we're thinking longs. Because everyone, majority, is too lazy or uneducated to understand the full spectrum of the market and to apply all info that is given to you to make the best and wisest decision when making these trading decisions. So let's go to the higher time frames. And I mean high. We are on the weekly chart. Now on the lower chart, right, it looked like longs were about to be in play. Well, let me show you why that's a bad idea. Let me show you why that is a bad idea. Can anyone guess? We've gotten this far in the course. Can anyone guess? Just take a wild guess. Look at the structure and the flow of the ebbs and flows of the market on this chart. Could anyone guess why that's a bad idea? Well, I'll show you. Let's even take it up to the monthly. Monthly. Previous support. Right here. Now resistance. Right here. To short. Reason to short. Big picture. Weekly. What do we have happen right here? Boom. Broke. Closed below. Came back to retest. Right? Previous support. Trend line break, close below. Come back up to retest. Now acting as what? Resistance here. Resistance here. To fall down. And as we follow the rules of the chapter of what we look for the higher time frames to find our bias and lower time frames that mirror what's happening on the higher time frames. Go to daily. What else has happened? This has happened. Looking for the same thing over and over. So while on those lower time frames, all this was looking like, oh, market's changing direction, time to go long. Nah. No thank you. No thank you. What's happened? Previous support. Broke through, closed below, acting as potential resistance in the same zone area. That's on a daily chart. Very powerful. Now we're on the 4 hour. 4 hour. As you can see, boom. Previous support right here. Broke through, closed below. Right, came back up to retest this area to act as resistance and fall further, potentially at least minimum another 170 pips or more, most likely. But all the while they're down there on the ridiculous lower time frames, it's looking like oh well, I'd say as I look from the left to the right of the screen, a little higher highs and higher lows. Shoot, it's time to go long. BCFX online trading course, we know better. We know better. We're looking for those same higher highs and higher lows to be made, but for a completely different reason to do this. To do that. And wait for what? And this is the 30-minute chart. What are we going to wait for? Because we waited to happen on a lower time frame to mirror what's happening on the higher time frame. Remember the chapter? Sniper entries and exits, right? You already know what we're waiting to happen on this 30-minute chart. And we're going to patiently wait, knowing that our odds are highly in our favor. We're going to patiently wait for that to happen. And when it does, it may go up, may break above, right? Come back, retest here, come play around here, may even go even higher. But when it does this and close below, you already know what we're going to do. We'll enter the market right there. Right here. Stop above the highs. Maybe 35 pip risk. Reaching for easily. Just aiming for the previous low that was made. That's a good 130 pips. You know. That's a good almost 1 to 5, 1 to 4 risk reward. 1 to 5, 1 to 4 risk reward. And knowing the odds are highly in your favor. So while everybody's looking at, oh, look at this, higher highs and higher lows made. So I'll just get in here and put my stop loss below the most recent low and get completely stopped out. That's what you're going to get. Thinking like the rest of them. This is part of psychology. The psychology of the market, of what the majority do. Notice, every noob, every would-be, wannabe trader always does the same thing. Staying on those lower time frames, thinking that, hey, I stay on a lower time frame, I'm going to make my money faster. I can get in and out of the market and make my money faster. Wrong, 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 wrong. That's not what lower time frames are for. It doesn't mean you get your money faster because the intervals of time are shorter. And once you see this happening over and over again, you will gain the confidence, which will then in turn help you master the psychology of trading. Knowing to let your trades that are running in profit run, trail your stop, move it past break even. And a lot of times, most of the time, people scare themselves out of the market. You may have a winning strategy, right? You may even have this strategy, the BCFX online trading course. But for whatever reason, the market is acting how it's acting. It may feel like it wants to retrace just a little bit deeper before it makes this major move that we're waiting for. And you may get stopped out. That may happen 2 or 3 times back to back, right? So now to pull the trigger the 4th time, now you're scared. Now you're just watching the market. Now you become frozen. Now you become frozen. You're scared to enter the market. Well, you just scared yourself right out of something that was potentially a good 150 pip move that would have made up for those 2 or 3 losses and some to make profit. You just lost out because you psyched yourself out. That's why, number 1, find a strategy that works. And this is the real. This method is proprietary in conjunction with how overall I look at the market and the way that I do it. I have not been taught this. I'm self-taught from experience and studying these numbers and these patterns and the way price moves and how it correlates with the higher time frames and lower time frames. This is completely proprietary to BCFX. No one puts it, you've heard support resistance, you've heard trend lines, you've heard retests, but as I look at the market as a whole and as it pertains to all the confluences and how it pertains to particular price points and how everything matches up, it's completely proprietary. But that helps with my personal psychology because I know it works. But that comes with time. People want to get rich quick and be able to quit their job almost immediately, but it takes time. Part of mastering that psychology is, number 1, not over leveraging. You have a $500 account and you're in 2 standard a standard lot or 2 standard lots. What are you doing? What are you doing? Stop it. That's what's killing your psychology. You're seeing those big fluctuations in drawdown on such a relatively small account, and relative to the lot size you're using, and you're scaring yourself out of trades that would have went your way, or that were going your way, but you got out too early, you got stopped out too early, because at the end of the day you were either margin called or you just got scared out of it because you're trading with money you can't afford to lose. How we think it's psychology, how we think at BCFX Signals, we love the higher highs and higher lows because we're looking to short, thinking against the majority. And we love the lower lows and lower highs because at that point when everybody's looking at lower lows and lower highs as a reason to short, we're looking to go long because we know what time frames they're stuck on and looking at, without completely taking in the full idea of what the market is doing. So that being said, that concludes the BCFX online trading course. You have any questions, you know how to reach me. And enjoy this journey. Enjoy the lifestyle change that you are about to experience. Enjoy it. Document it. Enjoy it. And just tell one other person minimum how BCFX online trading course has changed your life. Brandon Carter FX, Mr. Golden Ratio, signing out.